Hi guys, and welcome to this live session. Today we are going to be reviewing the 3 proven ways to build wealth. Before we get going, I want to know what brought you guys here today. Leave a comment and let me know what you hope to learn. You can either leave the comment in the chat, or more preferably, you could even leave it in the comments below the video. Also, a few housekeeping items. If you want more videos like this and you find this useful, you can go ahead and leave a like on the video, subscribe to the channel, and make sure you share it with your friends. That helps a lot. Also, just want to make you aware of a few resources I have for you guys, free resources. First is a compound interest calculator. This is something that we'll actually be using in the video. When we go over the examples of investing in the stock market, I'm going to use the compound interest calculator to demonstrate how you can build wealth investing in the stock market. Second, I've created a retirement savings calculator for you, which is completely free. Go ahead and check that out. It's got some cool features, like you can customize what country you live in and your gender, and it'll pop out your expected life expectancy, which is important when determining how much you need to save for retirement. Speaking of which, if you are in the financial independence retire early movement, I've created a FIRE calculator for you there to see how much you need to be saving if you want to achieve financial independence and early retirement. Also, a debt repayment calculator. You input your debt and it tells you, helps you pay that debt off and walks you through that. I've also created a free 1-week financial boot camp. This is if you are looking just to get some personal finance 101. This is a 1-week course. Sending a new lesson every day for 1 week. Also, there's a free video-based course, a link to that in the description below, as well as the 30-day money challenge. If you have not joined the 30-day money challenge, I highly recommend you do. I've also included a link to the private Facebook group where our millionaires in the making can have some really great conversations about personal finance in a private setting. And I'm in there all the time, so you can always chat with me as well in the Facebook group. All right, and also quickly want to mention, if you want to work with me directly, I have my full-length course, The 7 Life-Changing Money Moves. This is a comprehensive personal finance course. I take you from goal setting to retirement planning, debt repayment, everything in between. So if you're interested in that, reach out to me, and there's a link to that as well. So let's get on with it. The 3 proven ways to build wealth. Let's start with the financial independence retire early movement as a backdrop to this. One of the central premises behind the FIRE movement is to quickly build wealth, enough wealth that you no longer need to rely on your job to finance your lifestyle. So once you basically have enough passive income to pay for your living expenses, you are financially independent, and you're independent from your paycheck, right? And that's when some people decide to retire early. I am curious if any of you have heard of the FIRE movement. Leave a comment in the description of the video or in the comments below, yes or no, if you've heard about it. And also, if you have heard of it, let me know. Are you pursuing financial independence? Is early retirement something that you are wanting to pursue? Let me know, and if you're comfortable, let me know why and maybe what your goal is when you want to be able to become financially independent. So the idea behind financial freedom is very appealing, and that's why the FIRE movement has caught off, become so mainstream. But the question kind of remains there, so how does somebody build wealth? So the goal is to build enough wealth to sustain your lifestyle, but how do we do that? So to put it in the simplest terms, you have to own assets that are expected to increase in value over time. And specifically, we're going to cover 3 ways. These are 3 proven ways to create wealth. Number 1, living frugally, meaning below your means, and investing in the stock market, owning real estate, and owning a business. I want to be clear, you don't need to pursue all 3 of these wealth-creating paths at the same time. If you do, your chances are you'll probably build wealth quicker, but any one of these 3 will do it. But you have to be doing one of these 3 things. If you want to be generating wealth, you need to either own a business, invest in real estate, or invest in the stock market or equivalent assets. There's no other way to do it. Everything kind of boils down to one of these 3 issues. Let's go into them one at a time and expand upon them a little bit more. Number 1, living frugally and investing wisely. So this is most represented by those in the FIRE movement. So the math behind financial independence focuses on one variable, and that is your savings rate. And your savings rate refers to how much of your take-home pay you're investing in assets that are expected to return at least 5% above inflation. So if inflation was 2%, you would be investing in assets that would average near 7% return. And that means very likely that you're going to need to be investing in stocks. Lower risk assets like bonds are not going to give you that type of returns in the long run. So you're going to be looking at investing in passive income in stocks. So once your passive income from stocks and other investments is greater than your projected living expenses, then you're said to be financially independent. And some people might choose to retire early. Others may choose to kind of pursue more meaningful work or entrepreneurship. So the reason I think that the FIRE movement has become so popular is that it is accessible to nearly everyone. By focusing on the savings rate and not your income, this makes the concept of financial independence more accessible to more people. You don't need to make six figures or $250,000 or even $100,000 to become financially independent. You'll be easier to do that if you have a high income, no doubt. The higher your income, the higher your margin for error is. But it is open to everyone. If you're frugality is something that is open to everybody. And if you're frugal and you invest your money wisely, then financial independence is possible for you. And the investment of choice for those in the FIRE community is investing in the stock market, primarily through low-cost index funds, which, in my opinion, are probably the smartest way for ordinary people to invest in the stock market. And that's for two reasons. Since these funds passively track an entire stock market index rather than a specific sector like oil or technology, they take the whole stock market, the entire economy. They provide incredible diversification. And they are very low cost, much lower cost than traditional mutual funds, or if you were to try to pick stocks on your own, the fees you would incur doing that are pretty prohibitive. Also, you can buy units of index funds for under $100, which is very appealing to modest income earners who may only have a few bucks a month to put aside for investing. So the odds are, if you identify yourself as part of the FIRE movement, you're likely investing in index ETFs. It may not be the only thing you're doing, but you're probably doing that. One thing to be aware of, this is probably the slowest of the three paths to wealth creation that we're going to discuss today. Investing in index funds and living frugally. You'll get there, but it's going to take a lot longer. And I'll show you what I mean here using the compound interest calculator that I provided on my website. So this over here at LeFort.com, and I'm going to show you basically how investing in index funds over a lifetime can generate substantial wealth. So I'm going to assume our initial investment here is that you're starting off with $10,000. I'm going to assume you get a rate of return around 8%. So if you're investing in stock market index ETFs, and I'm going to assume that you're investing for 40-year time horizons. So let's say you're 25 when you started and you're going to retire at 65. And that you'll be contributing $500 per month over that time period. So those are the kind of assumptions there. And actually, so if you plug all this into the compound interest calculator and you can play around with it, I provided that link below the video. You can put in your numbers to kind of get an idea of what you might expect to generate wealth for you. And it'll show you the results here. So by doing that, by investing the $500 per month into index funds, your final balance by the time the 40 years is over would be about $2 million. And if you actually go down a little bit further, it's going to show you the sum of the additional contributions. So this means the $500 per month over 40 years, you contributed $240,000. And in interest, you earned $1.75 million in interest, which is pretty incredible. So you put in $240,000 and you got back $2 million, and $1.75 million was from compound interest. That's pretty incredible. And that's demonstrated in this pie graph here. So this little darker blue pie, piece of the pie, that 12% is how much of the total $2 million you contributed. And 87.5% of that $2 million is all compound interest. So what that shows you is the earlier you start, the less you actually need to save yourself to build substantial wealth over a lifetime. So going back to our slides here, what we did see though was, right, that is over a 40-year period. So that is going to be a little bit slower of a method to generate wealth, but it is the most passive. Number 2, let's discuss owning real estate. So this is the second proven way to build wealth. I'm not going to get into the own versus rent debate here, where it's a really hotly debated issue in personal finances, whether it makes more sense to own your house or rent your house. I'm not going to discuss that in depth. In terms of financial independence and wealth building, when I say own real estate, I'm not referring to owning the house that you live in. I mean owning the house that other people live in. So really what we're talking about here is rental properties. In the United States, business owners and landlords have 5 times more wealth than the average person. So let's discuss the 3 ways that real estate helps you build wealth, because there really are 3 terrific ways that real estate can help you build wealth. That's through monthly cash flow, asset appreciation, and debt repayment. Looking at monthly cash flow. So the monthly cash flow on a real estate investment is the difference between the rent you receive and the operating expenses of your rental property. A solid real estate investment should be producing positive monthly cash flow from day 1. If it's not, you're not investing, you're speculating. A savvy real estate investor does their homework before they buy a property, and they're going to ask themselves questions like, how much annual rent is the property currently generating, and how much does it have the potential to generate? How does that compare to similar properties in the neighborhood? How much annual operating costs are associated with the property? And what is the vacancy rate in the neighborhood? Meaning, how many months of the year is my rental property going to be sitting empty without any tenants paying me rent? So a handy rule of thumb to help determine if a property is likely to cash flow is called the 1% rule. The 1% rule states that the monthly rent from a property must be at least 1% of the purchase price. So, for example, if you bought a property for $100,000, and good luck finding a house for $100,000 in most markets today, but if you were able to find a house for $100,000, it would need to generate $1,000 per month in rent to achieve the 1% rule. And while this is a useful tool and a handy little, quick back of the envelope math to help you to determine if the property is likely to cash flow, it's important that if you're thinking about investing in real estate, you learn how to fully evaluate the potential of an investment and run the full numbers. The 1% rule is kind of handy, but it should be where you begin your analysis. It should not be where that analysis ends. So another reason why real estate has attractive cash flow in the first place is that it has numerous tax benefits. And those include, depreciation of the property, which is a funny one because, in actuality, it's likely that the real estate prices are going to increase. But since it's a physical asset that needs to be repaired and it has wear and tear, you can actually claim some depreciation on that property against the rent you receive. You can also deduct mortgage interest, obviously, property taxes, insurance, other operating costs. If you're, as a landlord, you're paying the utilities, you can deduct that. Homeowners association fees, any repairs that you do to the property, and in some cases, even travel expenses. If you're traveling to discuss or meet about your property on a business-related travel, you have the potential of even writing that off. So all of these can be deducted against your rental income for tax purposes. So that means you can put more of the rent that you receive directly into your pocket, or you can reinvest it how you like. The second way that real estate helps build wealth is through asset appreciation. So if the value of the house or the real estate property you bought goes up, you've become wealthier. There is no guarantee that your property will increase in value, but if it does, it will help you accelerate your wealth quite quickly. So since most real estate investments are leveraged, the third way that real estate helps you build wealth is through debt repayment. So what do I mean by the real estate investment is leveraged? That simply means that you used a loan or a mortgage to buy the property. Real estate provides, this third way of building wealth, which is paying down debt. So each month, when you collect the rent and you make a mortgage payment, your equity in the property and your wealth increases. So let's say that you bought a rental property for $300,000 and have a mortgage of $200,000. On day one, you would have $100,000 in equity in that property. After 20 years, let's say you've used the monthly rent every month to pay off that mortgage after 20 years. And let's also assume the value hasn't changed. That property is still worth $300,000. Since you no longer have a mortgage, you own that $300,000 asset free and clear, and you created additional $200,000 in wealth. And the best part of that is that your tenants have paid most or all of your mortgage for you. So if someone else, i.e. your tenants, is paying your mortgage, you don't even need, the property to increase in value to create wealth. You can just simply pay off that mortgage and you're getting richer. And if someone else is paying that out for you, then, that's double as good. So if you add up all the benefits of the monthly cash flow, the potential for the price of real estate increasing, and the debt repayment, you have a nice trifecta of wealth creation provided by real estate investing. Now, I do want to let you know my experience with real estate. So my wife and I, we own our home and one rental property. And we've gotten pretty lucky on the asset appreciation side. Since we bought our both properties, using leverage, it has helped us increase our wealth substantially. And I will say, we've gotten lucky. So you shouldn't plan for getting rich from real estate for the prices going up. That's speculation. If you're going to invest in real estate, it should be based off the income provided by the property. But I will say we have got lucky. We bought in two markets right before they began to take off. And it has helped us grow our wealth substantially. But I'll add as well, the double-edged side of that sword is that since the prices in the markets we invested in have gotten so high, I don't think I will be investing in real estate in the near future. The prices are just so high that it's difficult to make that cash flow work for us in the markets that we're comfortable with. So instead of investing in real estate in the near or midterm, I will be focusing more on the first thing we covered today, which was investing in low-cost index funds. That is now where I'm directing all of my additional cash flow every month. So at the end of every month, after we paid all of our bills and expenses and living costs, anything extra is getting put into index funds for the long-term wealth creation. So let's get on to number 3, owning a business. Owning a profitable business is how the richest people in the world build their wealth. So whether you're talking about the Mark Zuckerbergs of the world or even private business owners, it doesn't have to be someone owning a big private publicly traded corporation. Business owners in general are amongst the richest people in society. As a business owner, you have access to a lot of preferential tax treatment, especially if you've incorporated and you can choose to pay yourself a salary or pay yourself a dividend, whatever suits your needs. It gives you flexibility. And one of the greatest benefits of being a business owner is that if it's successful, you can pay other people to run the day-to-day operations of your business, which really allows you to sit back and collect passive income, and also allows you to free up your time if you wanted to get into something else like real estate investing or use your time in some other way to build wealth or just enjoy life. So while successful business owners tend to build the most wealth of any other group in society, I do want to make clear it is by no means a slam dunk. I don't want you to leave this video today under the impression that all you need to do is open up a business and you're guaranteed to be rich. It is not how it works. The majority of businesses fail. Actually, there's one stat that over 2/3 of businesses fail. So the term high risk, high reward applies to owning a business. If everything works out, you can build a life-changing amount of wealth. If everything goes up in smoke, you could lose all of the money you invested and potentially even more. Some business owners work 40, 50, 60, 70 hours a week for weeks, months, years, and never even make a cent. It is not a slam dunk that opening a business is going to make you rich. But there is another alternative. So if you want to dip your toes into the waters of entrepreneurship without leaving the safety of your full-time job and your full-time paycheck, you could start a side hustle. And when I say start a side hustle, I don't mean driving for Uber, because that is really more of a side job or a second job. I mean starting a side business. A side business like blogging or setting up an online store or selling an online product or affiliate marketing or something like that. That's something that you can do in your spare time outside of your work hours. It's an online business. As long as you have an internet connection, you can work on your business. This allows you to keep the security and the benefits of your full-time job while exploring the other avenues to increase your income. If you can increase your income while maintaining your current living expenses, you can have plenty of disposable income that you can invest in to begin to grow your wealth. So you get that extra income from a side business, and you can either funnel it into investing in index funds or investing in real estate. And that's what I've been doing. I have a side business. I have a full-time job as well. My wife has a full-time job. So that provides us with a lot of disposable income. And we have been pushing that disposable income into real estate and into stock market through low-cost index funds. And that is starting to help us accelerate our wealth quite quickly. So let's review some of the benefits of starting a side business. And I see three primary benefits. It can help you understand, first of all, if you are even cut out to be a business owner. Remember I mentioned owning a business is difficult. If you're owning a full-time business, you could be working 60 hours a week and not making a cent. Not everybody is cut out for that lifestyle. They'll stress them out to all hell, working that many hours and not having a paycheck coming in. Even if you're having some money coming in, you're not guaranteed the money you are at your job. So your job gives you a clear paycheck. It's easy to budget when you have a 9-to-5 job because on the 1st and the 15th, I get, whatever it is, $1,500, $1,000, whatever it is you clear in your paycheck, you can budget around that. If you own a business, you could have a great week and then you could have a dud week. So it makes it more difficult to budget. Not everyone can handle that. Number two, it provides unlimited upside to your income and your ability to generate wealth. So I mentioned my side business I write articles, I freelance write articles, I have an online school, I sell online courses. I take the revenue and the profits from that side business and I push it into real estate and I push it into index funds. And the more profits I get from the business, the more I can push it into index funds, the more those increase in value, the more I grow my wealth. Number three, the third benefit, if you have a successful, and if you're lucky, if you have a successful side business, you could turn it into your full-time or what I would call a real business. So again, if you have a product, say you're selling a product and it turns out, hey, people want to buy my product and lots of people start buying your product, you could get to a point where you begin to scale your business up that this could be your full-time occupation. If you're doing that on the side to start, you could have the benefit of having your 9-to-5 paycheck while you build the side business and scale it up. And then if it reaches a certain level of scale, you can decide, okay, I'm going to quit my 9-to-5 and turn this into my full-time business. And that's really the biggest benefit, I think, of starting a side business or an online business is that potential that, if it works out, this could be my full-time thing. If it doesn't work out, there's two options if it doesn't work out. If it doesn't work out at all, you can just stop doing it and, focus back on your 9-to-5 and kind of pat yourself on the back knowing you gave it a try. But if other option, if it's making some money but not enough money to quit your job, you can have just an additional income stream, which again, you take those profits, even if they're small, and redirect them into investments that are going to help you grow your wealth. So there you have it. The three ways to build wealth: frugality, investing in index funds, owning real estate, and owning a business. Those are the three proven ways to build wealth. I would love to know what you guys think of this video. Let me know in the comments what you think of the format of this. We're going to be doing a weekly live YouTube show. So please leave any requests for topics that you want me to cover in the future. You can leave that in the comments below as well. Again, if you like this video, please leave a like, subscribe to the channel. And if you learned something today, share this video with a friend. It would help a lot as I begin to grow this channel and try to reach more people. So thank you guys again so much for joining me today, and we'll talk to you again next week.